Okay. Welcome everybody. It's Andrew Mattner from Altitude Advisory here. Thank you for everyone that's joining us this afternoon for our webinar with a couple of friendly banking colleagues that we have here at Altitude. So I'll introduce Steve and Les shortly. But from our business perspective here, as a lot of you would have seen, Kristen and I have done a number of videos speaking about the current government stimulus and other aspects that has been in play throughout this coronavirus crisis that we've all been facing, personal and business front. And one of the key components to a lot of that stimulus, a lot of those stimulus announcements from the government has been in relation to the banking sector and the support that the banks can provide in terms of loan repayments and deferrals and the SME $250,000 loan scheme that was announced, and we thought, what a better way to, I guess, provide our clients and our friends of the business more information than to get some banks online with us to talk more about the specifics on those things, and also some just their general views on some of the things that are happening in the market at the minute. So that's the purpose of today. And as I said, I'm fortunate to be joined by Steve Elliott from Macquarie Bank and Les Ryan from Bank SA. I'll just quickly introduce the two gents. So Steve has been 33 years in the industry, mate. So you've been going for a little while. I don't know whether that's a good thing. Young at heart, and still got all your hair, which is pleasing. But obviously been working in the SME sector for a long time. In that middle tier business type level, and you're basically heading up a team of business bankers in South Australia and WA, primarily, from what I understand, in the professional services area, so yep. Financial planning, accounting, real estate, and other professional services. So, yep. Mate, thank you for coming online, and also Les Ryan, who's the head of agribusiness for Bank SA here in South Australia, and so. Mate, you've been in leadership or management roles for, I guess coming on for nearly 20 years, I suppose, in that sector with, primary focus around agri and health is the key sectors. So, and I know we've got a lot of, mutual clients that we deal with your team as well. So, thank you, Les, as well for joining us.
Pleasure.
Boys, and for giving up your time for us and our clients. So, so we'll crack straight in, and I guess we all did a little bit of preparation for this, and I'm going to go completely off script to start with, if I can. This has been, and I've said this to a number of people, unprecedented in terms of what we've seen. In not just from a health perspective, where the government's basically putting in a whole lot of measures to protect our health sector, but then the knock-on effects for business and the economy as well. You guys have been in this game a long time. Anything come anywhere near close to what we've seen over the last few months that you can maybe share with us? Steve, do you want to maybe?
Yeah, I'll kick off. No is the real short answer. Not that I've never seen anything like this previously. Yes, we've had some natural disasters and some even I'll go back to the 20 years ago to the year 2000 and the old Y2K bug, and the anticipation of what might have happened there. I think with the COVID situation, it's just happened so quickly, and I think the measures that the government have taken have been really good. But yeah, I think never seen anything like it at all, and I think it's just the how quickly it's all happened. We're sort of 2 months into probably the thick of it, and it feels like 2 years almost. It's just been that intense. So really interesting times.
What about you, Les?
In one word, no.
Yeah.
I've been around since, I suppose, the late 80s in terms of corporate commercial banking roles. So I've seen the stock market crash. I saw the early 90s recession and subsequent property market demise, Y2K, GFC. This is the one that takes the cake. You actually have foreseen how big an impact it was going to have on the economy and just the disruption it was going to cause and the speed with which the disruption ultimately unfolded. It was just unprecedented, and we won't see it again in a lifetime, I guarantee you. Takes the cake.
Yeah, and I suppose just like you've both expressed there, the speed and speed and severity of how this has taken effect. That it's had, we hear about the pressures that it's put on businesses. We hear the daily news about obviously unemployment and the pressures on employees and things like that. But the knock-on effects to people like yourselves and the teams that you work with in terms of then just being a support network, I guess, for the businesses and homeowners and things like that around this whole environment. Tell us quickly what it's been like from a being inside those four walls from a bank perspective, and how you guys have tackled it, or how your teams have tackled it, and I guess some of the experiences that you've had as you've gone through this, because I guess, like I said, you've been in the trenches like everybody else, just from looking through a different or slightly different window.
Yeah, I'll kick off there. Like I mentioned before, Andrew, we went pretty early with a full work from home scenario, and that was on the 18th of March. That the whole of Macquarie, pretty much globally, I think we had 98% of our global workforce working remotely from the 18th of March. For my team, which is just over 30 people, I guess the initial bit was getting used to a new way of working, but it wasn't so much about us and our way of working. It was, for us, it was really an intense focus on how what was the impact to our clients initially. So we had basically a phone call set up for all of my business bankers to speak to every one of our clients as quick as we could. So that was a really interesting time, because there was a lot of uncertainty for our client base as to how it was going to impact them, how long this was going to take. Different industries had different views on what the impact would have and was going to be. So I guess we went through the first round of phone calls to check in, to make sure and to let them know that there was assistance packages in place that we could work on straight away. And that progressed through the last sort of 6 weeks into more government packages other than just the banks initially and what they were offering. So there was, I think, in the first 2 to 3 weeks, some real urgency and uncertainty.
Yeah.
From there, it seems to have gone into a bit more of a steady pattern around, okay, we now know what assistance packages are in place. How can I avail myself of those? I think, and talking about our clients here, I think I know what impact this is going to be, whether it's an immediate cash flow has been switched off, or it may be down, like we were saying before, with potentially professional services businesses where their cash flow is, maybe 60, 90 days behind what they're doing now. So, it was working through all of that with clients, and I think it was intense. And I know from my team's perspective, the conversations were quite tough, not just from the client perspective, from the team as well. So as a business leader, it was making sure that our clients are being looked after, but also having some a lot of thought around how and what those impacts of those conversations are having on the bankers as well.
Yeah, cool. And Les, from Bank SA perspective?
Yeah, look, from the regional business point of view, we've obviously got about 70% of our businesses on farm, so obviously pure agri, and then we've got about 30% is post-farm gates. So obviously the most impact was felt by our post-farm clients in regional South Australia, who are running, if you like, town-type businesses, whether it be hospitality, accommodation, hotels, etc. From a staff point of view, our guys are already regionally based. They generally work quite remotely and isolated. So it wasn't a total culture shock from that point of view. Probably more so a culture shock for me because I've been 7 weeks at home now. I've been in the office in that time, so I've had to acclimatise to the remote side of things, but that's going okay. The initial tidal wave hit on the 23rd of March when all hell broke loose and the phones just didn't stop ringing in the context of obviously people wanting to know how we could potentially support them and alike. Look, even our own business continuity got challenged because of some of the offshoring arrangements that the group has and some of the offshore shutdowns that occurred. So we actually had some challenges around being able to provide certain services in a timely manner as a direct result of the COVID-19 impacts globally. So, so from a remote point of view, it's probably hadn't been a big shock. From a client point of view, it's probably more the town business clients. But if I think more, holistically about Bank SA, I think about our hotel industry has probably been severely impacted. Our property clients are in a little bit of uncertainty depending on the type of asset and the type of tenancy profile they've got, and that's still to play out in terms of how things recover and turn around and the speed of that recovery and turnaround. So,
yeah, for sure.
The tsunami's hit and gone, and now we're just working through continuing to process requests, which are continuing to trickle through now versus that initial influx.
Yeah, I can definitely relate to that working from home piece. We've just sort of moved back into our office here, and I know after 7 or 8 weeks at home, as much as I love my wife and my 2 daughters, I was quite glad to see some other faces around the place as well. So I'm sure there's a lot of people that are in that boat. We just, you just touched on some of that assistance and, that early influx of calls and inquiries that you guys had. In terms of the assistance that's been out there, what's been the main bit of demand, I guess, that you've each seen for clients in terms of stimulus assistance that they've been needing?
Les, did you want to kick that one off?
Yeah, I'll go first. The deferral of payments on business loans and equipment finance was the immediate offering that was able to be dealt with quite efficiently. It was an online application process for up to clients with a 10 million aggregate exposure. They just went online, ticked a few boxes, asked a few questions, and we were able to support that. Similar with home loans and consumer facilities, there was a deferral of repayments that they could fulfil through a portal. Once you got above $10 million and or you were looking for funding, you needed to obviously speak to your relationship manager. There were different packages available. The bank itself obviously had its own loan offering for clients that pre-COVID were obviously viable and had a business that was performing nicely. And obviously then the government guarantee loan became available. But the government guarantee loan has probably been the one where it's a slower burn and it's a harder slog. There's certainly demand there for it, but it almost requires a full due diligence unless you had an existing relationship and you're able to tick off a few, if you like, quick questions around what's happened to your business and how was it performing pre-COVID to fast track, if you like. But if they don't meet the fast track requirement, then it's a little bit longer, more elongated process, which is where we're having our pain point in terms of responding to the over 4,000 group-wide requests for that government guarantee loan.
Yeah. Macquarie experience similar, Steve?
Yeah, very similar. The repayment pause was definitely one that our clients were very much inquiring about in the early stages, and we were sort of quite keen to understand cash flow as well. So if it wasn't impacted straight away, then let's hold off until you actually need that, because you still get that 6 months, whether you take it at March or you take it in May, for example, you've still got that 6 months. So there's no point sort of taking it in March if you don't need it then. So we sort of had those conversations around, okay, when do you think you will need it? And you'll still get that 6 months. So I think that was really important for us. The SME guarantee scheme, again, it's very similar to what Les was saying. There was probably a lot more devil in the detail with that one, other than just, the government will guarantee 6 months, half of the the loan. And I think we're also having conversations with our clients around that one, if they're sort of saying they may need it, because with that, it is a 3-year term with 6 months repayments deferred at the start. So basically, a client needs to demonstrate that they can repay $250,000 in 2.5 years, which I guess there's, if we've got a reasonable client behind that and we understand their business, then we can generally structure something a little bit, maybe something a little bit better than that. Not saying that that's totally out of the picture, but we'd probably prefer to have a good conversation with our clients and understand their full position so we can tailor that the best way other than just going for that cookie cutter approach, I guess.
Yeah, and I think I probably want to explore this one a little bit more. I think, from what you said, the payment deferrals, that's been the easy part of this. Yeah. Go in, click, apply, park it. Like I think, Steve, your point about making sure you got your timing of your deferrals of that is a really relevant point. So, you using the professional services, example, which I know you look after a lot, and we were talking before the session that, well, my view is that, financial planning, accounting, other professional services will fill this at the tail end of this, whereas hospitality, tourism, and so forth have filled it at the front end. So, obviously the timing of when those deferrals and so forth come in is completely relevant and something to consider. But this 250K SME guarantee scheme, and I know I've had a couple of inquiries with different clients and their banks. Yeah, you're right. That is a lot harder to get access to. Steve, starting with you, can you maybe just talk about from I guess call it the Macquarie product side of things? Yep. What does that look like? How can you get in and access to it? Existing clients versus new clients. What's the devil in the detail that you mentioned?
Yeah, look, I think it's, and I'm probably talking more about existing clients here, Andrew, because, they're the ones that we went and proactively approached. And so they're the ones that we sort of had a reasonable understanding of them, their business, their cash flow, the security that they've got. So therefore, with the loan repayment pause, that was, relatively straightforward once we understood, where that impact was. With the 250K SME government guarantee scheme, our existing clients, we can again look at them and basically say, well, okay, we could probably potentially look at something for 5 years if that's an easier way for you from a cash flow perspective, rather than trying to fit it into the box of what the government put through there. I think again, I think the government's done a great job, and I think the packages and the stimulus we put in place is good. It's just that maybe the understanding in the market of some of those things, and perhaps we'll talk about JobKeeper later, but the understanding in the market, I think of some with that 250K was that it was almost like a grant or a payment rather than a loan. And that, I guess the scheme was, put in place for the banks to administer on behalf of the government. But it was up to the banks then to properly assess those loans, assess that client, which is, depending on the situation and how they have been impacted, it's not always going to be the right thing to do. And
it's normal credit assessment, basically, isn't it?
And we've got more than ever, just as normal as ever. We've got our responsible lending guidelines, so we've got to adhere to those and make sure that we're not putting someone in an even worse position, 3 years down the track than potentially what they are now.
Yeah, cool. Well, what about Les from Bank SA perspective? Do you want to maybe just weigh in with your experiences in that space?
Yeah, sure. Look, the application process is again through the online portal, so you can go to the Bank SA homepage. You can actually click on, and you can go through and answer a series of questions. It talks about the eligibility criteria there as well. So fundamentally, that's a viable business pre-COVID. It was the number one criteria. Obviously, your business had to be impacted by COVID. Turnover less than 50 mil, you must be a tax resident of Australia, operating a business in Australia. New and existing were able to apply, so that was fine. And it had certain specific usages of the funds. So it had to be purely business purpose. It had to support current and future cash flow needs. And you can't have otherwise obtained any unsecured government guarantee funding elsewhere. It's all like spelled out to you reasonably clearly as to the eligibility, but then of course you get down to the lending criteria applies. That's where your responsible lending piece still applies. You need to go through and present a certain amount of financial information. Generally speaking, you'd want some interim figures to the end of December, maybe March now, given where we are, and obviously some BAS statements and stuff like that. You had to have your house in order prior to coming to the bank and seeking the facility. And if you did, the likelihood was that you would be eligible for support under the government guarantee loan. Yeah.
Well, one of the things that's interesting, and I guess talking about this lending criteria and the frameworks, one of the things that's been, I'll call it a pretty significant black mark against loan applications for a long period has been things like ATO debt, for example. Now, in the context of the current environment where businesses are cash flow poor and they're all of a sudden not able to pay their December BAS or March BAS or January instalments or whatever it may be, in the context of that, can you maybe shed some light for those that are joining us as to how those type of things get dealt with in line of this abnormal scenario, if you like? Les, do you want to maybe
I will. So pre-COVID, if you did have a repayment arrangement with the ATO, the bank would want to understand why you had it, what the purpose of it was, why did you need it at that point in time, and subject to that understanding being acceptable, then the bank would say, well, hey, they're a cheap, easy source of funding. If your cash flow can tolerate it, then that was okay. Certainly with the COVID-related impacts, we're going to have to draw a line in the sand and obviously say, well, again, if your business was viable and you didn't have any pre-existing issues that we weren't comfortable with, sure, you're going to inherit some as part of the arrangements that are available and the relief that's available. Then when we sit down at the end of this, get out the other side, we're going to say, well, okay, what's your proposal now? What arrangements are you going to make with the ATO for the funds that are owed? And just make sure that your business and cash flow can tolerate it. But we certainly won't just say, hey, you've got an ATO debt, sorry, you're out. That won't be the case.
Very, very similar for us too. In fact, probably exactly the same. It's just that understanding again of the business and the client and the scenario that they're in prior to where they are now, and then that I guess that forecast of what it looks like going forward.
Yeah. So I mean, just quickly, just on the SME guarantee scheme, ballpark rates. What interest rates are we running at on those facilities?
I think ours is 4.7%. There's no fees to set that up. I think that was part of the government sort of directive there. Yeah. As I said before, all of the banks and non-bank lenders as well, for that matter, applied to be part of the scheme, and for them then to administer that package of funds that the government allowed them to use. Yeah. From what I understand, and we haven't done a lot of them at this point, only because it was announced and then the details took a while to come out, so it's still pretty early days. But from what I understand, I think some of the more or some of the online lenders probably are more geared up to do these types of things where they are unsecured lenders online in a pretty quick, easy manner to get those through. Yeah, so the initial discussions we had internally was that, yes, we're part of it, where we will, obviously talk to our clients around that and be part of the scheme. But potentially those online lenders might be ones where there's a higher demand for.
Mm-hmm. Okay. What about from your perspective, Les? What rates at Bank SA on?
Yeah, so we've got the 3-year unsecured government guarantee loan at $4.99. Similarly, no establishment fees, no monthly fees. The short-term overdraft bridging facility for JobKeeper was $7.99, which was meant to be a short-term bridge till you get your ATO refund.
Yeah.
Yeah, look, there's 30 banks and 5 alternate lenders out there, as Steve mentioned, and each will have their own specific criteria in terms of how much due diligence they'll do to look at, giving an answer on the actual loan facility. As I said, we've got a fast track sort of tick the box type arrangement for existing clients. But if you're a new client, or even if you're a client of bank SA who'd never borrowed before, it's almost like going through a full application process to then get a response to the answer to your loan request. And look, we've got very experienced bankers because of the demand who are now talking to small self-employed carpenters or perhaps business people who've never borrowed before and need $20,000 or $30,000.
Yeah,
you have to walk them through that whole application process. So, from a advisory point of view, there's certainly an opportunity in your area to help clients get themselves ready to talk to a bank and present the best possible case, which I think is important. Don't just take it as a rubber stamp tick and flick. It is going to go through a due diligence process, unless, as Steve pointed out, some of the other alternates and or online lenders may have a slightly more simplified criteria.
Yeah, I think you make a really good point there, Les, just in terms of that being ready and we talk to our clients a lot to be ready for major events, whether it be ready to sell, to sell, for example. You never know when somebody's going to come in and want to write you a check, ready for these type of events and having, budgets ready to go or financial statements ready to go or be on, cloud accounting, whether it be Xero or QuickBooks, MyOb, so that management reports can be run at any point in time and your data up to date. I think, that type of information is critical, especially, also in the context of what we're saying now, rolling in and saying, I need 20, 30, 50, 250 grand to get by over the next 3 months. Well, it's not necessarily that easy.
No. And that's where, again, I think there was some misunderstanding, potentially a misconception about, how this was going to be put into play, especially early on in the piece. We got a lot of inquiries early when the government announced that they will be doing this. But I think as the detail rolled through, that interest or inquiry from our client base anyway sort of dwindled fairly quickly because they could see that there was, a fair process behind it. And I think by then too, there was also, as I mentioned before, there was a lot of urgency at the start as to that unknown as to how this was going to play out. I think after the first month, it almost became, okay, we know where we're at. We know what the impact has been. We might have applied and have put in place a repayment pause. I don't actually think I need that extra. And that again, that's coming from us as, bankers to mainly professional services businesses, certainly not to those that have been severely impacted potentially in that hospitality, tourism sort of sectors, which is, it would be really, really difficult and, a different scenario for sure.
Yeah, cool. So, we've just quickly touched, I guess, on the application side of things. Some businesses out there are going to have a relationship manager that they're already dealing with. Some, Les, like you said, never borrowed money before and need to come in and do that. From both of your perspectives, can you maybe just share some insights as how you think businesses should go about tackling this or moving this forward? Should they be just initially speaking to their relationship manager if they've got one? How far out should they be talking? So, if they've got a cash flow forecast, should they be giving advance warning, 2 months, 3 months out, saying, okay, well, I'm going to get a hit over here. I'm okay now, but I'm going to cop a hit. The online portal you mentioned. And then for new to business or those that have never borrowed before, covering those 3 areas, what's the best way for people to tackle it? Les, do you want to maybe fire off first?
I'll fire off. If you've got a relationship manager, definitely be speaking to your relationship manager about any arrangement you want to make. So whether it be deferral, whether it be borrowing additional funds, government guarantee, JobKeeper bridging, whatever, talk to your relationship manager. If you don't have a relationship manager, then the portal is the initial way to lodge a request. That request will then get allocated to our, if you like, team that look after non-relationship managed clients. So that could be in our SME business. It could be, as I said, being spread amongst some very experienced bankers at the moment because of the demand that's out there. So we're trying to respond to these as quick as we can. But certainly for the people who are looking for the government guarantee loan, the online portal, if you're not relationship managed, is the best way to engage the bank, whether you're an existing client, a new client, or whether you've borrowed money or you haven't borrowed money in the past. That's your best way to get in contact with the bank and to start the process.
So, same for you, Steve, or what's
Yeah,
the
very, very similar. I mean, as I mentioned before, we did go very early and proactively to our existing client base. So they would have, all of our existing clients would have spoken to their relationship manager. So and we put some plans in play for those that, potentially didn't need it straight up and to follow them up down the track. We're a digital bank. We don't have any branches. So the online approach to us for those that don't have any borrowings with us is very similar to what Les was saying there. And I think, what you touched on before, Andrew, is really important as well. Is for those that potentially haven't borrowed before and maybe not so sophisticated or don't have that support in-house as far as, in-house accounting or bookkeeping or CFO and that type of thing, is to get in touch with their advisors earlier rather than later to get that support, get up-to-date financial information, which is really critical going forward, plus, those forecasts, as you mentioned.
Yeah, no, that's good. That's been great, gents, in relation to that stuff. I think that'll help out people a lot. I just want to talk a little bit more now, I guess, in your views generally on where we're at. This is it's quite a fluid situation in terms of what's happening in the economy and in the market, and there's lots of negative press, more so than there is positive press regarding all this scenario at the minute. Do you perhaps want to shed some insights from your economists or others within the respective banks on, I guess, some general macroeconomic data as you guys see it at the minute? So, Steve, maybe you just want to kick off from a Macquarie perspective to start.
Yeah, sure. So I did do a little bit of digging, which I needed to do because I'm by no means an economist. And this is general info, so not to be taken, unless we knew, individuals' specific circumstances. But I think our internal view is our unemployment rate will obviously spike into the high single digits. There's no doubt about that. I think more importantly though is the hours worked in Q2 is expected to fall by at least 15%. So that's what we're looking at there. We think that the unemployment rate is likely to remain sort of around or above 6% into 2022. So that's, again, the Macquarie's internal view. Mm-hmm. Interest rates are expected to be down at that 0.25% for the next few years. So I think there'd be no reason to think that there'd be any RBA movements over the next little while. The housing prices are a really interesting one because although we've seen, that hit quite significantly in the larger capital cities already, with low interest rates continuing on, and depending on how quickly we get out of this, the house prices, I don't think anyone can really give a good view on what that looks like at this point, just purely on this happening so quickly and so severely for a short period of time until this starts to, until we start to come out of that, and then looking at what other monetary policy might come out to ease the issues there. So that's a tough one to predict, I think.
Yeah, okay. Les, what about from a Bank SA perspective on some of those similar metrics, interest rates, house prices, unemployment? What's the Bank SA team looking at?
Yeah, same disclaimer as Steve, but in terms of the house view on interest rates, low and staying low. We don't think the cash rate will move before 2024, so that's 4 years' time. So,
any chance from either of you guys whether we're going to see negative interest rates in Australia? What's your thoughts?
Probably not.
No.
That's what the Reserve Bank governors say, but never say never.
Yeah.
But our view is very much low interest rates for an elongated period of time. So when you think back about the GFC recovery and what happened, and things did start to come out of it reasonably quickly. This is not going to happen quickly. If you take a line through that projection and that prediction, things aren't going to turn around quickly or recover quickly. So house prices probably 5 to 10% off nationally, maybe a bit less so in South Australia where we don't have quite the same boom bust sort of cycles. Maybe a slight uptick in 2021, and that'll be driven fundamentally by what is happening with the recovery and the turnaround and the economy picking up. The big housing growth, though, is going to be population growth impacts and the immigration approach with international travel. How long is that going to be around for? How long is it going to take before we open our borders up, not just within the country, but to the globe, is probably going to be one of the key drivers of house price and house price fluctuation. I think Steve made a really good point about unemployment versus underemployment. I reckon the unemployment number won't probably go to double digit, but the underemployment number is probably more like mid-teens.
Yeah.
And that's probably the key to, in terms of GDP sort of outlooks, in terms of what funds there are within the economy to actually spend and drive GDP. I think most pundits are saying, GDP will be down about 6% for the calendar year 2020, probably 10% as at the end of June, but recovering in the second half. 2021 probably will bounce a bit on the basis that things have recovered and things have picked up. The recovery in 2021 may be up 4% is our house view, which probably lower than what the Reserve Bank's saying. I think the Reserve Bank's predicting 2021 to recover by 6%, which is effectively the downturn for the full calendar year this year. We're not quite as bullish as the Reserve Bank, but it's interesting times. But certainly JobKeeper had a big impact on unemployment. If one of the JobKeeper would have hit 16 or 17% was our prediction.
Yeah.
He has kept that connection and has probably kept it, to a point where it's going to probably stay under double digits when we do get to the peak of it, which will probably be the end of June, I suspect, in terms of the actual impact of the unemployment number here in Australia.
Yeah. What do you guys think is going to be perhaps some of the key drivers or the key sectors that are going to drive that recovery on the other side of this? Les, you just mentioned GFC and I'll call it the pretty significant bounce that happened post GFC. And I guess in my time of doing this is the only thing that's even remotely close to what we're experiencing at the minute is what we went through with that. How do you, or where do you see this growth bouncing back from? Like, is it going to be in ag? Is it going to be in infrastructure spend? Where do you think it's going to come from?
Yeah, look, the ones that have probably been hardest hit probably are positioned to, I suppose, get the best experience from when the lockdown eases. So obviously when it comes to tourism, accommodation, hospitalities, cafes, restaurants, they're the ones that are going to come back. Will they come back to their former glory? Stay tuned. It's probably going to take a while, I suspect, but at least they will be able to participate more fully in what is the new norm, if you like, in terms of the post-COVID release of the lockdown measures. Look, ag hasn't been as severely affected. Some subsectors have been. Obviously, the cray fishermen felt it very early and upfront when the China market shut down, and obviously their export market virtually closed overnight. The wine game, and in terms of wineries, they're probably feeling a little bit of the pain, both on the export side plus the restaurant trade and
on premise. Yep.
So they're also going to be a beneficiary when things do reopen. But even the healthcare sector, it's interesting. I've worked in healthcare industry specialisations, and we used to say they were almost recession-proof. Well, they might have been recession-proof, but they're not COVID-proof. And certainly had their share of, experiences where they probably never thought they would ever experience an impact on their take-home pay. So they will also recover. As
kind
restrictions
of ironic,
ease.
isn't it? Really, we've got a health crisis that's causing pain in the health sector.
Yeah.
Yeah.
Thought.
Yeah. Steve, Macquarie's views similar?
Yeah,
or?
it probably. I'm not sure if we've got an internal view, but I think my personal view is that there's definitely some pent up demand from consumers for, for tourism. So within our own country. So I think once the internal borders are unlocked, I'm sure there will be a lot of movement across the country. I think, like Les, there is pent up demand for that hospitality sort of sector to get up and running again. Retail spending potentially is another one where people have been stuck at home. I think there'd be some demand there. That health sector definitely. I think we've got a reasonable sort of penetration into the health sector, and the fact that they've been there's been no I'm just trying to think of the word, what do we call it again? I can't think of the word. Anyway, those operations that have been put on hold, I think there's a massive demand there now to get back, and that's up and running. From in the last couple of weeks, we've seen that sort of back up and going. So, I think they're the sectors that will, start to bring us out of it.
Yeah.
I mean, the resources sector, from a WA perspective, hasn't been hit that hard, even though, the China thing's obviously quite interesting with what's happening there, and, their potential threats to, to not buy. I think we were talking about it before from the agri perspective as well. But I think, if China gets going again and need our raw materials and, our food, then, maybe that's the areas that will get us going.
Yeah, you just mentioned that those China developments and, latest news today, obviously China's pulled the pin on 4 major, Northern Australian meatworks, which, can have ripple effects. I'll call it the hangover. Where do you guys see any potential, coronavirus hangover? So, there's obviously, we've seen massive issues in the US in terms of their handling and economic impacts on all this. We've seen the very early, I call them left jabs or little spats with China regarding, imports, exports, and trade and things like that. Yeah, these things have obviously potential ripple effects and knock-on effects, 6-12 months down the track, which I'll call the hangover for what we're going through now. Where do you guys see maybe those longer-term impacts that we, businesses should perhaps be thinking about now?
Yeah, look, I think it's been talked a fair bit about in the media recently of, what we've seen and, with regards to our reliance on supply from China, and, are we prepared to pay more for goods that are manufactured potentially in this country? Is that something that all countries look at globally, as far as, that reliance on overseas trading partners? So that to me is probably one that'll play out as we go. But it then does get down to the consumer and whether they are prepared to, put the hand in the pocket to pay for something a little bit more, a little bit more than what they'd normally get if it was coming out of a foreign country.
Yeah. What about you, Liz? Do you see maybe some future, you mentioned ag's been pretty insulated from all this thus far. Do you see some hangover impacts or on that sector maybe towards the end of this calendar year, and whether it be grain exports or livestock or whatever it might be. What's your sort of take on some of that?
Yeah, well, you're right about the developments today with the meat processing, and also the 80% tariff on barley mooted as well. So, yeah, there could be a bit of a tit-for-tat risk involved from an export point of view, particularly from the ag side of things. We certainly don't want to get into a bundle with our major trading partner. I think most of us are aware that 38% of Australian exports go to China, and a lot of them are food and resources. So we certainly don't want to get into a spat with them. As far as a hangover here in Australia, I think the commercial property market has probably have some interesting times, driven partly by businesses that might not make it to the other side, but also our brave new world of working from home, and how much will people want to or need to have to return to a corporate head office environment where they won't want congregation of numbers in a small confined space for the foreseeable future. So I think potential, impact there and stuff to play out, but also naturally think anyone that's involved with international travel and the obviously tourism industry has got some interesting times ahead still. So probably the next 12 to 24 months, it's hard to see international travel getting anywhere near that to normal. As much as we'd all love that overseas holiday, I just can't see globally how we're going to be able to with opening our borders up quickly. So they're probably two areas I see some challenges for.
Yeah, I think there's also the maybe the flip side of that, Andrew, is yes, there will definitely be some hangovers from this. That's a given. We've talked and spoke to a lot of clients that have found better ways of doing things in this last 6 to 8 weeks, and have found efficiencies in the business that they would probably have been forced into because of the scenario that they're in. Yeah, that they won't go back to their old ways of doing things. And what we're doing here today is quite a classic case. Strata managers, for example, we look after a lot of strata managers, and they have the council of owners meetings where they try and get people together, and they travel for them, what have you. They're doing all that online virtually now, and most of them won't go back to those, especially the smaller ones. They won't go back to that. So I think there will be efficiencies that we've found in this period where businesses will be better for it.
No, I completely agree. What they say, necessity is the mother of all invention, and we've definitely seen a lot of that happening, and people innovating to solve some of the problems that they've been currently faced with. So I completely agree, and look, I guess as traumatic as all this is, there's also a lot of good that can come out of these type of situations as well. I think it helps build resilience in terms of employees and business owners. As you just mentioned there, in relation to innovative ways of doing things, but it also, every now and then, my view is that we need a bit of a clean up at different points in time, and this type of event helps clean, separate the hay from the chaff a little bit as well. So in line with the bank's lending criteria of those sustainable and viable businesses, before this will be sustainable and viable businesses after this, and those that weren't will clear the path for those that are. So there's it'll build some resilience and some productivity and some efficiencies and some further gains going forward. So I think you've made some good points. So boys, just to wrap up, can maybe I'll just get you to quickly maybe give me your top 3 things each that business owners should be doing at present, from a bank's perspective, to move forward before we wrap up. So, Steve, just from your perspective, what are your top 3?
I'd say definitely forecast. So let's have a look at where you are now, how your cash flow is going to be impacted, or or is it coming out of it now? So that forecasting bit, I would just touch back on what I've just said there. Have a look at how you've, I guess, evolved over the last 6 to 8 weeks, and see what of that you can take forward to continue those efficiencies. And probably the last thing, which we probably haven't touched on, but is just to get a feel for how your people are going with all of this. I mean, everyone's in different scenarios, and I know, just from my team, I've been really conscious of making sure we're touching base regularly, and that whole well-being aspect of people going through this horrible thing that we've gone through, and everyone being touched differently. Just making sure that everyone's coming back in a reasonable state of mind.
Yeah, cool. Les, just your top 3, mate.
Yeah, look, I think number 1 is don't stick your head in the sand. Talk to your bank. Let them know where you're at. Let them know what's happening. Sometimes people tend to just want to hide from the issue and shy away from the problem. So I would encourage anyone who needs support to talk to the banks. You will not find a more receptive and friendly banking industry than you will at this point in time. So reach out. So don't put your head in the sand. Cash flow is king. So obviously not only preserving it, but actually being brave enough to ask for support and help. So whether it be from your landlord, whether it be from your suppliers, whether it be from your bank, whether it be from your professional services provider, whoever has an impact on cash that you can retain in your business, you should be having a conversation with them, because they want to see you get to the other side as well. So it's important you have the courage for conversations to make sure you do get to the other side. And probably the third one for me is, the stop, start and keep doing. I think this is a time of reflection and a time of being able to work out, well, what was it that wasn't really that effective prior to this outbreak, and is that a core part of my business that I need to continue to do, and is there a smarter, better way of doing things going forward? So those are probably the 3 areas for me.
Right.
And from the banking sector's point of view, it's been a hell of a tough 6 or 7 weeks, both internally coping with the volumes, the pressures, but the banks are up for the challenge. We're up for the providing the support. Yeah, we know we're going to tear up a balance sheets a bit, and we're going to have to go through a bit of pain ourselves, but hey, we're all in this together. And if we don't get to the other side in one piece, then what is the other side going to be like? It's not going to be much. So
That's some great points. So thank you, boys. Like I said, I'm very grateful for you making the time for us and for our clients and the friends of our business. I think there's been some great insights that you've both shared that people can take away and actually practically do something with, which is really important at this time. It's not just noise. There is genuine practical tools that they can go away and have a conversation with their accountant or their financial planner or their banker or whoever it might be to help get through this. And Les, I completely reinforce what you say there, that we're all in this together, and if we're working together, we'll all come out of this better on the other side. So, gentlemen, thank you for your time. I'm very grateful. Stay safe. All the best to your team and your families, and we'll catch up soon. So thank you very much.
Thanks, Andrew.
Thanks, Steve.